Greetings everyone, Joseph James here once again with your nightly newsletter brought to you by schooloftrade.com. Today was October 27, 2009. Had another wonderful day in our trade room this morning, guys. Before we talk about our live trades we took today, I want to encourage you guys to stop into our YouTube page. That's /School of Trade. Great free resource here. And while you're there, please subscribe to our channel so you get all the new videos. And please rate and comment on this video. Let's take a look at our trade room totals today. Now, we brought in 47 ticks on crude in a matter of a half an hour this morning. Most of the markets, the euro, the Russell, the gold, most of them are very sideways. The British pound gave us some nice moves today, but we didn't get into any of those trades. And of course, we'll show you guys the trades we did take on crude today, but very easy to wait patiently, wait for those perfect patterns to develop, and they came just after 10 o'clock this morning. So, of course, 470 this morning in the room. That brings our weekly total to 790. That puts us at 8K here, guys, for the month of October. 8,000 here on a 4-contract account here in the month of October. Very challenging month that it's been. But, guys, the proof's in the pudding right here. 8K in the account, of course, since May. Guys, do the math. Almost 48,000 since May. So, once again, guys, we'll keep you posted here as we move through the month of October here. But we are doing very well here so far. The term of the day today is a sideways market. What is a sideways market? How do we play them? Why are they so important to know about? Well, a sideways market is when price trades in a well-defined or narrow trading ranges. It'll fail to make new higher highs or new lower lows. And usually a sideways market means there are going to be fewer participants, which will have lower volume. And of course, lower volume means we'll have fewer high percentage opportunities. And fewer opportunities, of course, that means we've got to be disciplined. Patience to wait for the perfect patterns. Now, in a sideways market, because there's lower volume, there's going to be a greater opportunity for manipulation. So people trying to telegraph trades. So make sure you watch your time and sales window. Don't watch your dome, because in low volume environments, you'll see telegraphing happening all the time. That is a form of manipulation that happens on your dome. If you want more information about that manipulation, ask me in the live trade room tomorrow morning. Trend followers, beware. All right, if you're looking at a sideways market, there's not going to be much of a trend. You will see certain things that can tell you ahead of time that there is no trend. What are some things that are going to be very identifying a sideways market? Well, we'll take a look at that in a second. But if you're a trend follower, beware of that. Now, of course, if you're trading a sideways market, you've got to have a trend reversal setup pattern. We talk about these high percentage setups. And of course, every day I meet a new client that's having trouble with trend following setups. Guys, in a sideways market, much like what we're seeing in most of the markets we trade today, right? These sideways horizontal markets, guys, trend following patterns or breakout patterns are going to be a nightmare to work with. They're going to be very difficult to see happen successfully. So a trend reversal pattern, something that, of course, takes advantage of that reversal or that choppiness back and forth, the breakout, the failure of the breakout, that's, of course, we call our two-step pattern. So you've got to have a trend reversal pattern, guys, that'll help you navigate through these sideways markets. Now let's take a look at what these look like. Now this is a great visual example of what a sideways market looks like. You can see, right, we've shaded here in the top, we've shaded this area of sideways price action. We've got double tops, double bottoms. You guys can see that even though we may have broken above or below this by 1 or 2 ticks here or there, it quickly gets sucked right back down into this sideways bracket. Now you'll also notice that the majority of the volume happens towards the center of the bracket. If you look at the volume indicator at the bottom of your screen here, you'll notice that between the times of 9 o'clock and 9:30, right, that's where the most volume is, but you can see very simply there that the most volume happens when the price is trading in the center of that sideways bracket. Again, remember guys, low volume, one of the byproducts of a sideways market, and of course low volume means less opportunities, which means we've got to be patient. How do we trade this? Right? How do we trade a sideways market that looks like this? Well, 2 ways. I'm going to look for breakouts out of the sideways market, or look for failed breakouts. In other words, I'm going to buy the lows and sell the highs. Buy the lows, sell the highs. Very simple. Remember that. Buy the lows, sell the highs. Which means I'm not going to buy the high of this bracket, nor am I going to sell the low of this bracket. I will wait for this horizontal bracket, this horizontal price action. I'll wait for it to break above it, and then I'll buy the breakout. Or I'll wait for it to break below and I will sell, right, the breakout below. But I will not play at the extremes inside of it. So wait for the breakouts. Now, if for some reason we see price pop out and then come right back in, we call it a failed breakout. look for the two-step pattern, right? That two-step setup pattern. And that's a great example of how we're not going to predict, we're not going to buy the highs, we're going to sell the highs. So if we see price try to break out towards the upside, it quickly gets swatted back down in. That's our failure breakout, right? Failed breakout, that's your two-step to the short side. All right, guys, as always, come out and join us tomorrow morning in our live trade room, and we'll show you guys how we trade sideways markets. The majority of the markets we see every day are going to be sideways. So come out and join us. We'll show you guys how we use our indicators, how we use our rules to navigate these sideways markets, and how to buy the lows and sell the highs. Of course, we open up tomorrow morning at 7:45 a.m. Eastern Time tomorrow, guys. We'll be doing our free webinar on Thursday this week at 11:30 a.m. And guys, as always, pick up a copy of the beginner's course. Now, let's take a look at some of the trades we took today. Now, two of the trades we took today, guys, were on the crude market. Now, great examples here, guys, of two breaker patterns here on crude. Now, how did the market look this morning? What was the market like? What did we see? Well, we saw a very slow and sluggish open once again. And as you guys know, at 7:45 when we open up the room, we do our mental prep. And part of our mental prep today reminded us that we may have to wait for a couple hours sometimes. Sometimes the best patterns don't come right away. And we want to be prepared to wait patiently. And of course, that's exactly what we had to do today. We had news events at 9 o'clock this morning. We had news at 10 o'clock this morning, which means between 9 o'clock and 10 o'clock, we really didn't have much to work with there. 9 o'clock news, 9:30 open, 10 o'clock news. So it wasn't until after we saw the U.S. Open come and go and the 10 o'clock news, the consumer confidence number come and go, until we really started seeing some good volume in the market this morning. Of course, we are waiting here, ready, willing, and able to take the trades when they show up. All we had to do was sit back, relax, and wait for the patterns to come to us. Now, as you guys know, the first step here is to identify the levels. Now, these red lines here, that's the first step. I already have all those red lines, and of course, I'll zoom in here, guys, for our first trade at 10:19 today. Again, here on the crude, this is a breaker short. 78.32 is the entry here, and as you can see, it's around one of these important red lines. And we talked about the 3 steps to your success in your trading. The first step is identify the levels and look for these patterns. We identify this level here just below that 78.34. We look for the pattern. We look for, of course, the swing low below that level there, which of course was 78.34. So the red line is our level. We then look for the break around that level, which of course in this case was 34. We took the break below it. Entry there was at 32. We took +4 and then got scratched out at our point of entry, as you guys can see before it whipped right back up against us. So once again, good example here. Find the level, then look for patterns. That's exactly what we did. Now our next trade here, guys, 10:26, only about 6-7 minutes later, back on the crude, still on the crude here. This is a breaker long, another trend continuation pattern here. The swing high level here, guys, 78.72. You can see that marked up with that blue line, the horizontal blue line. Now, guys, this example, a little bit tough because these are dynamic indicators, obviously, so the levels have been recalculated afterwards. So there was a red major level of resistance here at 78.69. We then, of course, broke above that level. It recalculated here, so you can't see it in this chart. But we then broke that 78.72, which was the swing high above it. Once we got above 72, our entry fill here was at 75. We took 4, 8, and 23 here on your runner. Now, if you guys are with us here in the room this morning, you watched as, what do we see in this one? It's not shown here in your charts. What do we see in this trade today? We saw momentum flip up, confirming our long trade. But what was the big catalyst? The big catalyst was that strong, steady, increasing green pace of the tape, right? That pace of the tape indicator, that's what really made it almost impossible to resist this trade this morning here just before 10:30. And what a big trade it was, right? 39 ticks there at 10:26. Add that to your 8 ticks, guys. There's your 47 ticks here in crude. And as you can see, in less than 15, 20 minutes that it took to line up. So very easy, as you guys can see, on a $4,000 account, that's all you would need is a $4,000 account to trade this, and you just made more than 10% in less than a half an hour. Now, guys, as always, guys, come out and join us tomorrow morning, 7:45 a.m. Monday through Friday. We will show you how we use our entry patterns with our entry rules to have more confidence in your entry trigger. The Euro session, guys, is still suspended due to low volume. We'll do free webinars again on Thursday. And come out and join us, guys. Grab the beginner's course on the way out to your free trial. And please rate and comment on this video. Drop us an email, sales@schooloftrade.com, for more information about lifetime membership. My name is Joseph James. Thanks for your time today, guys. We'll see you in the room tomorrow morning, 7:45. Don't miss a tick. We've made almost over $8,000 in the room this month. It's going to keep going, guys. We'll see you tomorrow morning. Bye-bye for now.